Hello, welcome to this video on sole trader financial statements, and it's calculating the depreciation charged in the income statement and the accumulated depreciation in a statement of financial position. So a short example to show you how it all works. So here's the example. We've got an extract from a trial balance for the year ended the 31st of December 2024. Now in there, you've got the motor vehicles cost. It says £40,000. That's basically how much they've cost us in the past, how much they cost the business in the past. The equipment cost £25,000. It cost that £25,000 in the past. It's got motor vehicles depreciation or provision for depreciation of £10,000. And that's the balance at the end of the previous year, the 30th of December 2023. Likewise, the equipment provision for depreciation of £5,000 is the balance at the end of the year ended the 30th of December 2023. Now, you've got some notes now to go with this. Motor vehicles are depreciated using the reduced imbalance method at 25% per annum, and equipment is depreciated using the straight line method at 20% per annum. So what have we got to do then? Right, so required. Number one, calculate the depreciation charges for the year ended the 31st of December 2024. There will be an expense in the income statement. And number two, prepare an extract from the statement of financial position at the 31st of December 2024 showing the non-current assets. Right, so the first thing I'm going to do is I'm going to work out the depreciation charge for the year for the motor vehicles and then the equipment. So the depreciation charge for the year for motor vehicles, it was on the reduced imbalance method. So that's your cost, take away cumulative depreciation times the percentage. So the cost, we go back to the trial balance and go to see what the cost was. The cost of motor vehicles was £40,000. So that's £40,000. Going to take away the accumulated depreciation. So as I said before, that's the figure in the trial balance. Motor vehicles provision depreciation £10,000. So it's going to be take away £10,000. We're going to times that by the percentage. We're told the percentage was in the notes 25% per annum. So the 40,000 take away the 10,000 gives us the 30,000. And we times it by the 25%. That should come to £7,500. There we have it, £7,500. Equipment now, depreciation charge a year. It is the straight line method at 20% per year. So it's the cost times the percentage. The cost for the equipment was, we go back to the trial balance, was £40,000. So no, that's the motor vehicles. Equipment was £25,000. And the percentage we were told was 20% per year. Now, I've used in the notes here 25% per annum there, 20% per year there. Just to show you that both per annum means per year and per year is the same as per annum. So both of them means 25% per annum or 25%, sorry, not both 25%. Motor vehicles are 25% per annum and equipment is 20% per annum. It's the same as 25% per year and 20% per year. So the depreciation charge then for the equipment is going to be at 25,000 times 20%, which will give us £5,000. So that's the working out the depreciation charge, which is an expense in your income statement. So that'll be depreciation charge for motor vehicles, £7,500 an expense in the income statement, and equipment will be depreciation charge for equipment, £5,000 in your income statement under expenses section. Now the bit that people need some help with. Statement of financial position as at the 31st of December 2024, the extract. We're only going to show you here the non-current assets. So you've got three columns. You've got a cost, accumulated depreciation, and a carrying amount. Now remember, the carrying amount is also known as a net book value. So it's a net book value as well as a carrying amount. So motor vehicle, we went under cost. So the cost is our figure in our trial balance. So go back to the trial balance figure. We've got £40,000. And the equipment, again, in the trial balance was £25,000. So that's straightforward. Now, accumulated depreciation. Now to get there, I'll slow down for this one. You go to your provision for depreciation in the trial balance, which is, for motor vehicles, 10,000. Then you add on the depreciation charge in the income statement of motor vehicles of 7,500. That's going to give us £17,500. So I'll just show you that again. I'll highlight that in yellow to show you. So 10,000 for provision for depreciation in the trial balance of motor vehicles, plus the depreciation charge in the income statement, And that's going to give us a total 10,000 plus 7,500, 17,500. So I'll highlight them, you have to see where they all come from. Now, equipment for the equipment accumulated depreciation. So again, I go back to the trial balance, equipment, provisional depreciation is 5,000, then plus the depreciation in the income statement, which is also 5,000. So that's going to give us a total of £10,000. So let me highlight those in a different colour for you so you can then be able to follow it. Light blue. Here we go. So we've got a light blue. 5,000 now in the trial balance. £5,000 in this year's income statement, giving us a total accumulated depreciation then of £10,000. Now the carrying amount, that's your cost of 40,000 for the motor vehicle. Take away your accumulated depreciation of £17,500, which is going to give us £22,500. For equipment, the carrying amount, it's a 25,000 cost. Take away the £10,000 accumulated depreciation, that's going to give us £15,000 carrying amount. So now we just need the totals for each column. So the total cost is going to be £65,000, 40,000 plus 65,000. Total accumulated depreciation will be 27,500, which is the 17,500 plus the 10,000. And a total carrying amount will be 37,500, which is the 22,500 plus the £15,000, give us 37,500. Now you can check that figure, so it should be the same here. It should be your cost of 65, take away your accumulated depreciation of 27,500, and that does come to £37,500. Now, as in the full statement of financial position, the cost of the accumulated depreciation, they're underlined when we finish with them, but my carrying amount or the net book value is not underlined because I'm going to use that later on. So there we have it. We've got the depreciation charge in your income statement, and then the depreciation in the accumulated depreciation section in the non-current asset section, we state a statement of financial position. So I hope you found it useful for you, and thanks very much for watching, and enjoy the rest of your day. Take care.